Hi, Nina. How are you?
Good, thank you. How are you?
Good, good, good. Let's just wait a few more minutes. So far, it's just you and I. Oh, wait a minute, though. We got Fabian here. All right. Have you guys started talking yet about your teamwork? I know it's not for a couple weeks. You two?
No, we have not.
Yes. No rush. I was just interested.
Yeah, we've been working together in the past, so I
Oh,
think
good,
we should be good.
good, good. Yeah, I'm gonna just wait to see if any of your classmates join us. If it ends up just being us three, that's fine. I did today. I think I just wanted to go through. Oh, good. Aaron's with us too now. Good. So we got three out of the five, which is great. Got Emiliano and Dylan aren't with us yet, but yeah, today I wanted just to briefly discuss WACC, which is something that is coming up um, in the discussion board currently this week, and then it will be featured on your next case study. And then also, I just wanted to briefly go through um, the Franklin lumber case, just to make sure you're all comfortable with with the results, with the answer key that I believe I sent out to everybody as part of the grading um, of that case, which I completed earlier this week. But most of you did very well on it. Actually, you all did very well on it. So I'm pretty happy with the results I saw for Franklin. It looks like you're pretty much on the beam when it comes to determining profit and loss from the story problem information on a project, how to get the profit loss, how to convert that into cash. We went through that pretty heavily on the Caledonia example case. So I was hoping you would all carry that forward, and it looks like you all did. Oh, good. Dylan's with us also, so now we got uh, now we got four out of the five. So let's go ahead. I'm I've got WACC up, or at least the website on weighted average cost of capital. I I posted to the current week discussion on WACC, just providing a few websites that you might want to look at. Um, I listed those out in a discussion posting I made just a little while ago. But you don't have to get those initial posts for the discussion board in until tomorrow night. But I wanted to, preface everything with a little discussion on WACC today, because it is obviously important. Um, have any of you begun to look at WACC? Do you understand what the concept is? Do you have questions on it? Does anybody want to talk about WACC a little bit and what it might mean to a company? Okay, I'm going to call on Aaron. What do you think?
Yeah, I actually haven't gotten a chance to look at the discussion or anything. It's been a pretty busy week at work and just life in general. But
What?
from but
What? You mean my course isn't the number one priority in your life? Come on, hey, what
it's
is
high
it?
it's high up there, but it's not number one.
Okay, no,
But
no,
from what
that's
I'm
fair enough.
what I'm
Um,
looking at the article you have pulled up,
yeah,
um, I guess it just looks like it's the company's future cash flows needed to be discounted to arrive at a present value for the business, which I'm guessing but it relates to the cost of capital instead of cash flows.
well, yeah, that's a good part of it. I think what you really have to do is step back a little bit and say, okay, well, what is the weighted average cost of capital? The cost of capital is really sort of well, it is literally a weighted average of the different components that go into the financing of a company. You might, go out and borrow from a bank at an interest rate. Okay, you might issue some debt in the form of bonds to to help finance projects or the company. You might issue stock. You might use retained earnings or equity to finance the company. So really, you have to think about what is going into the different elements that you are using to provide capital to the company. And then once you come up with a weighted average, which you can see here, I mean, you've got a weighted average cost of capital formula, which is your return on a debt or the rate on debt. And debt, since it flows through the income statement, right, is going to be 1 minus the tax rate times debt divided by debt plus equity. That's the debt divided by debt plus equity piece. That's your weighting, right? Because in this case, in this formula here, let me just step back a little bit and clarify that statement. In this formula, you've got two components of capital. You've got debt and you've got equity. So debt divided by debt plus equity is going to give you the weight for debt, how much of a percentage of debt plus equity is debt, right? That's literally what that piece of the formula means. And then, skipping over or moving over to the right to the equity piece, you got equity divided by debt plus equity, which is going to be the remainder. Let's say you got, 60% of the company is financed by debt, then that means the remaining 40% in this instance would be financed by equity. Okay. So you got your rate on equity or the cost of equity as computed, okay, is going to be multiplied by the weight of equity, right? And just like the cost of debt, but at 1 minus the tax rate, because that's, like I said, debt is carried to the income statement while equity comes right out of your balance sheet, right out of the equity portion of your balance sheet, right? You go back to financial statements to remember that, debt flows through the income statement in the form of interest expense on debt, literally. Okay. But anyway, we all have plenty of time for you to look at WACC, to go through a few examples. I think what I'll do next week is develop a couple of example problems that you can work through. I will tell you now that WACC will be featured on it will be featured on the final exam. You'll have a couple problems where you're going to have to calculate WACC. Since it's open book and open note, and you got a week to rip through the 50 problems on the final, you should be able to look up formulas either from the websites like this one here. This is one of the ones that I did post today to the discussion board. If you like the layout of this, I grabbed this one because I like the layout of it. I like the fact that they lay out the WACC formula there very clearly. And as we go down here to look at the components, you got debt equals, the market value of debt, equity equals the market value of your equity, right? Our debt is the cost of debt, our equity is the cost of equity. I mean, it's in really, for all intents and purposes, it's a fairly simple formula. But anyway, I like the way this website's laid out, so that's why I posted it to the discussion board this morning, and why I'm showing it to you guys now, because I think it's pretty well done. But anyway, just looking at this and continuing on step by step, I'll read through it with you, but before getting into the specifics of calculating WACC, it's important to understand the basics. why you need to discount future cash flows in the first place, right? So one of the things that WACC is used for is to determine a hurdle rate or a discount rate that you will apply to different projects. I mean, in the case of Franklin Lumber, for instance, or the Caledonia example that we discussed last week, you've got a discount rate that you have to apply to the future cash flows to understand, what the net present value of the entire project is going to be. Well, the discount rate that a company uses is usually their WACC, right? Makes sense because if you are spending a certain percentage, which is the weighted average cost of capital, excuse me, to finance your company, then you're going to want to understand then how that rate used as a discount rate is going to impact your future cash flows from projects, because that's literally what what the financing for your company is going to cost you as you carry on as a as a business, as a going concern. So that's the main point they make in this first paragraph of the step by step. And then they talk about, low risk and high risk. You feel the chance of, collecting future cash flows is high or low. You can use something that is either, above WACC as a discount rate to further discount future cash flows, or you could even, use a percentage as your discount rate that might be less than WACC if you feel that, you know, the estimated future cash flows from a project are really likely and there's not really a lot of risk. So that's how WACC is used as a discount rate. Let's just continue on here, see what they have to say. Examples of debt, fixed dividends, fixed risk-free rates. Yeah, risk-free rates are often associated with U.S. Treasuries, since there's very little risk of the government defaulting on any bonds or any T-bills or anything like that. The risk-free rate is often just the Treasury bill rate, the going rate of T-bills. Then they're just talking about the capital structure of debt and equity. Obviously, that can change. If a company decides they want to, issue more common stock, then that's going to be a higher component of WACC is going to be made up of equity, so that this portion of that formula will become a greater percentage. This equity divided by debt plus equity, right? The numerator here would grow, which would obviously then make that a greater percentage. They obviously, always will have to add to 100%. And once again, this is just two components of the capital structure. But, obviously they will have to total 100%. As equity increases, the debt percentage would decline, and vice versa. If the company decided they wanted to finance their business by issuing more debt, and maybe they want to go through a couple of bond issues or whatever, then the numerator here of debt would increase relative to the equity component. But it's really just a question of understanding what is a weighted average and how that then applies to capital structure. But it's an important concept. And like I said, I am going to have a few questions on it on the final exam. But I would really just suggest you kind of read through this, and maybe you can become, familiar with it to a certain degree. And maybe we can talk about it a little bit more on Monday. any other thoughts at this point on WAC? Any questions, or you want to hold off until till Monday on those? Everybody pretty good? Well, it sounds like you are anyway, so let's hope that you are. Um, good. Okay, let me just I'm going to stop sharing this one, and now I'm going to just move over very quickly to sharing the Franklin Lumber answer key. Can everybody see that one? Did everybody receive this, by the way? Did everybody get this as an attachment to my feedback on the case?
Yeah,
Dylan, did
I
you see
believe
this?
so. Yeah.
Aaron, everybody? How did you find this case? Because obviously we did spend a lot of time with Caledonia, and I know this is different from the Caledonia example, but then again, I kind of went through Franklin and went through Caledonia and just kind of highlighted the differences in the cases. You had a little more to do with Franklin, but you know, the Franklin case I thought was easier in a couple respects. You didn't have to worry about a working capital requirement, but then again, you had a salvage value on both the presses, both the pressing machines, right? So you had to deduct that from your initial cost in order to come up with a depreciable base, and then divide it over the 7 year useful life and things like that. But I thought for the most part, the case wasn't terribly complicated, or hopefully didn't throw too many of you curveballs. You all did very well on it, so I was very pleased. Did any of you have any real questions on this material, on this spreadsheet that I sent everybody?
I I just didn't get the spreadsheet. Um, it wasn't attached to the feedback, but I think it's okay for me.
Okay, Fabian. Yeah, I'm glad. Um, I do like to share these answer keys with you because it's obviously a good way to see where you might have made it some errors. Um, if if anyone did make errors in on the Franklin case, they were minor, and I was really looking more for not necessarily exact mathematical precision. Obviously that's desirable, but that's not the crucial element. The crucial element is to understand, how to go about solving the problem. If you can lay out a profit and loss statement from you know, all these component pieces of information you got over here, if you can, lay out the P&L and then convert that to cash, if you can apply the salvage value at the end of the period correctly, um, you know, if you can then calculate things like the payback period, the net present value. I mean, if your formulas were good for those different metrics, you could figure out the internal rate of return, the modified internal rate of return, the average accounting return. All of those are important components to understand and to be able to calculate. But like I said, I thought you all did pretty well with it, so I was pretty pleased. Um, but yeah, if no one has any real questions on that, and everyone's reasonably satisfied with how they did and their grade, which I would hope that all of you are, because you all did well. Um, then I suppose I'm going to turn you loose here on a pretty short meeting, but I didn't really have much more to talk about really today, other than, you know, kind of preparing you for a couple of weeks of discussion and then some application of weighted average cost of capital on the, I think it's Taylor Brands is the next case we have due in a couple of weeks. There'll be some weighted average cost of capital components that you'll have to determine in that case. And obviously um, the discussion board this week is on WACC, where you'll have to obviously, comment on it, make some sense out of it, maybe provide an example if you want to do that. Um, and then the homework that's going to be due, I guess it'll be next week in week 6, is going to be kind of focused on WACC also. So um, definitely, definitely prepare yourself for some pretty heavy dose of weighted average cost of capital over the next couple of weeks. And we can talk about WACC in some greater detail. Maybe I'll whip up 3 or 4 examples of WACC that we can walk through on that I can send you like Sunday night maybe, and then we can talk about them on Monday at our next Zoom meeting. So I'll do that. I'm going to make a note to whip up some WACC examples for in preparation for our next meeting. But yeah, I'm going to turn you guys loose if there's no other questions. Are you guys all pretty good? Everything seemed to be going well so far in the course. Anything generally that you might want to ask me about or bring up?
Things are going pretty well.
Good, Aaron. Yeah, I'm very pleased. Your results have been very good. Fabian, Nina, Dylan, you're all doing well. I'm very pleased with, the results I see. You're all, participating. You're all, logging into our meetings. Sorry about canceling Monday, but I really wanted to get the grading done on Franklin in preparation for today, even though you all did so well, you probably didn't really have any real major questions on it, but you're all doing really well and you're attending, and I'm very pleased. Obviously I was throwing kind of a curveball with this course and MBA 472, which almost all of you are also in, um, by inheriting those courses from Dr. Ding kind of midstream. I didn't really have a lot of chance to prepare, but you know, I have taught both of the courses before, but not recently. So I had to go back into my notes and all that stuff and kind of, revise the course a little bit. And I was kind of caught a little bit flat-footed, but hopefully I'm just about all the way up the learning curve again, or at least the refamiliarization curve, I'll call it. And I'm pretty comfortable with where we're at, and the assignments that I develop for the remainder of the course, I think are going to be, appropriate and fit in well with your readings that I've now assigned for each different week going forward. So hopefully everything will be good, and you guys will get a lot of good information out of this. We've now gone through. Dr. Ding had the first case. She wrote that one, but I'm selected Taylor and I selected AAA. Everything seemed to be good with those cases. They all make sense.
Yeah, so far no problem.
Good. Good. Okay. Well, I'm glad that they're, making sense, and hopefully you're getting some good information out of them. Um, there will be some of this on the final, but we'll cover that, and I'm gonna end up posting a kind of a topical study guide on the final uh, that you can that I'll make sure to publish a week or so before the final week when it's going to be due. or week 9 rather. I think it. Yeah, I think I got the final at week 9, right? And then we got the Great Plains Serial Team Project case in week 10, if I remember correctly. I don't have the syllabus in front of me at the moment. I think that's how it is. But yeah, I'll make sure that I get the topical study guide for the final exam published for you guys a week or two anyway before the actual week 9 due date for that. But yeah, I think I'm gonna let everybody go. If you don't have any further questions, thanks everybody for joining. I will post the recording for this meeting on YouTube and share that link. And I guess I'll be seeing you all in a few hours for the BA 470 meeting. So we'll see you pretty soon, huh?
Yep. See you soon. Thank you.
Okay,
Thank
thanks,
you.
Noah.
Alright, see you later. Thank you.
Thanks, Aaron, Fabian, Nina. Thank you, everybody. See you all in a few hours. Bye-bye.
Yeah.